How are you? Hey everybody. No guitar. I'll bring that back sometime soon. But we are here with another episode of Losers Lunch, our mostly weekly. We missed one or two here because it's conference season, as you know, if you're in mortgage and real estate. But it's our weekly exploration in and of excellence, although lately it's been mostly about the markets, which haven't been that excellent. My guest this week, and he's been on the program once before, but he's got some really exciting stuff that we're working on together in our strategic partnership. Adam Scott Rutkay, for a long time friend, business associate. So we have some pretty interesting things to discuss. Welcome.
Thanks a lot for having me.
But before I do, real quick, hey Mark, how are you? Talk about the markets. A little bit of a busy week. I think busy in terms of the things that I really look for. So what do I mean by that? Well, today we had New York Fed manufacturing. More on that in a moment. Tomorrow we've got Red Book. Don't really care about that too much. Industrial production, again, not a big one. We have some cash flows. So tomorrow is a little bit of a slower day here domestically. On Class C, Ginnie Mae's roll. Will be really interesting to see what that looks like because the drops have been just so massive that it'll be interesting to see how those securities roll. But outside of that, what we have is housing starts, building permits, Philly Fed, jobless claims on Thursday, existing home sales, nothing on Friday. Next week, we've got flash PMI, which has been under 50 now for a while. Richmond Fed, Wednesday, building permits and home sales. Thursday's an important one, Q3 GDP. Tough one to say, Frank. I'm not sure. We're expecting 2% Q3 GDP. Look, folks, I don't know. Definitely not on the consumer and inventory side. It'll be interesting to see what this number is. KC manufacturing, Dallas Fed, and of course PCE on Friday, which used to be the Fed's preferred measure of inflation. New York Fed today came in negative. For the 7th out of the 9th last month, since January is the first month it turned negative, was positive in February, April, I guess it would be the 6th out of the last 9 months, positive in February, April, and July. Hey, Alan. Negative in January, March, May. He does look
Thanks,
great.
Mark. Thanks, Mark.
June, August, and September. Pretty telling. My wife and son were at the Millennium Mall on Friday, and the sales rep in one of the stores we go to says the foot traffic has been non-existent for the last 30 to 45 days. Now, Scott, you and I used to go to, when I was up in New Jersey, we used to go to lunch weekly with a buddy of ours, John. Talk about business. So, I mean, it was a business lunch. And not that we wrote it off for anybody who's watching, by the way. I mean, it was like Blaze Pizza. It cost like $8. But shout out to LeBron James. We used to go to Blaze Pizza every Friday and then walk around the mall and observe business activity. And generally our observation was business wasn't that great. But have you done that at all lately? I mean, what are you seeing up there?
Yeah, I mean, if you ask me, it sounds like it's only my wife and my daughter that are still shopping in the malls. We have a pretty upscale mall similar to the one that you have down by you. And if you look around, a lot of people walking around, milling around, not a lot of bags in their hands. And that's really the telltale sign, right? Is who's actually shopping versus who's wasting time. Um, a lot of the malls up by me have started to convert to losing a lot of stores and changing what they're actually doing in those stores. So you see more restaurants going in. You see more things that are not shopping experiences, but more experience driven. There's a couple pop up Instagram stores, if you can believe it, where kids go into different rooms, take pictures, post them, and go. So nothing related to shopping, but related to getting people in the doors just so that the owners have something to do with their rent.
Huh. Wow, I find that interesting. Had a conversation this weekend, and like sort of similar to this. It came up, and somebody asked, and I did Jay Duran, the Culture Man's podcast on Friday, so that'll be coming out sometime soon. Had a really good time with it. And I think that conversation may have started on that podcast even too. And one of the things I've said for a long time now is I'm really concerned about what my kids and or my grandkids are going to do for a living in 10, 20, 30 years. I don't mean tomorrow. I get it. What percentage of our working population could be yeah, Jersey pizza is good.
Nothing like it.
What percentage of our working population could be automated out right now? And I think the example I used, understanding how businesses are efficient theoretically and operate, is we have automated cashiers at the store. We have automated toll collectors. So my question to a CFO, a CEO, or CFO, possibly, or both, if I were sitting across the table from the CEO of Home Depot, which was an early adopter of automated checkout, I'd ask a simple question: does self-checkout work? Now they're going to give me one of two answers: yes or no. If the answer is yes, my question is, then why do you still have cashiers? If the answer is no, then my question is, well, then why do you still have self-checkout, right? I think that we know what the answer is. The answer is self-checkout works.
Sure.
Okay. So then the next question of, well, then why do we have cashiers? If Easy Pass works, or Sun Pass here in Florida, whatever you call it, wherever you are, why do we have toll collectors? Because I know in Jersey they don't do this, or at least maybe they didn't when I was there. But in Florida, if my Sun Pass doesn't work, as long as my car is registered, thanks for that, Frank. Because I want to talk more. I'm going here in a second. If let's just say I don't have my Sun Pass in the car, exactly right, Alan. It just automatically debits my account because it knows my license plate. Are they doing that in Jersey yet?
Yeah, so all of the New York City tolls, the bridges and the tunnels, have gone to cashless.
Yeah.
And the bulk of the lanes on the highways have gone to cashless. There are some cash lanes on the highways. And that's exactly what they do. They either read your Easy Pass or they read your license plate. If you don't have an Easy Pass, they send you a bill. If you do have an Easy Pass, they ding the Easy Pass.
Yeah. And look, I mean, let's be smart about things. You're telling me that when you buy a new car and you get tax and tags, you whatever they call it, you pick that up or whatever they send it to you. You're telling me that we're not at the point where for pennies on the dollar, they can't put a chip in your license plate that automatically charges you tolls. For Max this weekend, I said, why don't we get an AirTag? We're always worried about, because he's a little bit of a rambunctious little thing, as you know, that, he's going to go running out, slip through a fence or whatever. So I said, why don't you just go out and buy an AirTag? So we put an AirTag. For those of you that might not be familiar, it's Apple's sort of mobile, where are you, doohickey. Well, and that's a fair, by the way, Jason, that's a very, very fair point. I think that Home Depot certainly is not in the service business. They're in the low cost business, dare I say. So I think that would be, and I'm getting there. So give me a sec. That would be a business specific decision. But we put an air tag on his collar. And so theoretically, if God forbid he got out, we'd be able to track him and find out where he is. But so I would imagine that the technology exists that you could put some sort of chip in a license plate that would automatically pay your tolls wherever you are. And do that at probably a cheaper cost than sending out the Easy Pass things. Long story short is, what I have said was, I don't know what people are going to do for a living in 20, 30 years, because most of these job functions can be automated. Some of the few things that can't be automated is cooking. And it might, one might argue that. But cooking, and I know that we have automated bartenders, but maybe the bar experience, musicians, entertainers. So it doesn't surprise me that we may be turning the mall into a recreational experience.
Right. And if you look at the mall that was built in by Giants Stadium, it's I think it's either the biggest or the second biggest mall in the world, owned by Mall of America, the one out in the Midwest. There's a amusement park there. There's a water park in there. There's a ski experience there where they have a ski slope that you can go down. There are tons of restaurants. It's everything but shopping, right? And they still have stores and they still have sections of nice stores, but that's dwindling. And you can tell it's dwindling. You can feel it's dwindling by the people that you see there.
I think that Elon Musk made a call 6, 8, 12 months ago or whatever, where he thought that ultimately the white collar workforce might be under siege. Part and parcel of what we're saying here, right? You can automate many white collar functions.
Sure.
Some of the blue collar stuff, more difficult. How do you automate a cop, a fireman? How do you automate a construction worker, plumber, an electrician? Are we headed to, how we spend our money, where we spend it? One of the other things I was talking to Jay about was, the Western culture is one of consumption, much more so than the Eastern culture. The Eastern culture is you live in a small house or a small apartment with a small closet, and you have 10 of the best outfits that anyone's ever owned, not 100 disposable outfits like we tend to.
I was just about to say, think about what you spend money on now. An electrician, a plumber, a carpenter, someone that's really good, your landscaper. My landscaping bill has probably tripled over the past 5 years. Versus my clothing budget has gone down tremendously. I haven't worn a suit in, aside from a funeral or a wedding in 10 years. When's the last time you wore a top? And all of those businesses had huge industries around them. I came from a family that manufactured clothing. It's a completely different business. My daughter wears, sweatpants every day. That wasn't the case in the past.
So unintentionally, by the way, this will sound like a big setup. It's funny when you have happy coincidences, but trust me when I say, folks, very unintentionally. You're right about that, Frank.
Right.
The reason why I wanted to have you back on the program, because you were on once before, but it's been a while, was that we've partnered with a public company to have an offering that's been in the works now for what would you say we've been sort of all together strategizing? 4 months, 5 months?
About 4 or 5 months.
And ironically, UWM just announced this, and we were sitting there, and it was like sort of a bad, worst kept secret. Everyone knew by then what they were going to announce, but they announced this replacement for title insurance. And we had been working on this collectively now for a while. And so talk to us about the new company and one, this being the first offering of the new company and what it is and what it means to home buyers and things like that.
Yeah. So listen, buying a home is not an expensive proposition. Refinancing a home is not an inexpensive proposition in a lot of states. States like New Jersey, Florida, California, Texas, title rates are high, and those aren't the only states. And what has been identified is that a big portion of the inability for people to buy first-time homes is the cost of entry. And any way we can make the cost less for the buyer or the person refinancing is something that we're super interested in doing. And what has been identified is a product called an attorney opinion letter. And an attorney opinion letter works very similar to title insurance, to the borrowers especially. There is an insurance component to it, so if something happens down the line, they would be covered, but is a less expensive option in most cases. HUD believes very strongly in this product. They believe that 20% of transactions in the next, after 5 years from now, about 20% of transactions that occur will occur with an attorney opinion letter versus title insurance, and save the borrower a tremendous amount of money. In some purchase situations in high cost states, we're finding $1,000, $1,200, $1,300 worth of savings relative to title insurance. And that's huge. That is something that is very meaningful to a borrower or a buyer today. Runs exactly the same. For them, it'll be seamless. It doesn't look any different. We still do searches like we would normally do. We still settle loans like we normally do. The difference is the document they get at the end is not a title insurance policy. It's an attorney opinion letter. But for them, will be exactly the same.
I love it. And one of the things that was important to us, and you're right about that, Jackie, one of the things that was important to us, at EPM, given our philosophy, the things I've said, rising tide can lift all boats, the spirit of EPMX, and the two broker shows that flanked EPMX was unifying through collaboration, was that this wasn't an EPM only product, right? That this would be available to all of your customers. So can you talk a little bit about that?
Absolutely. So the product exists for everybody as it stands now. So there are some carve outs that it does not work. There are lenders that are looking to get rid of those carve outs and are able to get rid of those carve outs. But as it stands today, any lender can accept these, provided they're selling it to Fannie, Freddie, and VA. And it works for all. So I'm actually presenting this to another broker shop later today at 2 p.m., another person who does do business with EPM, but doesn't do all their business with EPM. So this is offered to them, and provided that the lender accepts them, you can use it anywhere.
I love it. So yeah, it's Fannie, Freddie, VA, FHA, USDA clearly will happen, just not yet. And I think that, we've teamed up to provide some content that we can put in originators' hands that will really sort of talk about the benefit of it. And the idea here is to empower the originator to provide more affordable financing to their potential homeowners. It's good for refis too.
Sure.
If we get the loan at EPM, that's great, but this is not an EPM product. This is a dream forward product. You could connect with Scott at dreamforward.com. The product This specific product is called Home Forward. So the company is Dream Forward. The first product offering is Home Forward. And I know, Scott, you'll be working on others, and there'll be other partnerships, scott@dreamforward.com. So if you email Scott if you want to know more about it. There's really no learning curve. It doesn't cost anything to get signed up, as long as a broker or an originator, whatever company you work for or whatever company you're doing the loan for, as long as they're willing to accept the attorney opinion letter and Scott says that, hey, it fits this house, you can do it. It does not have to be an EPM loan.
Right.
Want to be clear about that.
And listen, competition is ultimately best for the consumer, right? So this is a competitor to title insurance. And I want to make it clear that not all title underwriters are happy about this product, right? I mean, you can imagine that the Fidelities of the world, the Stewarts, the First Americans, not jumping on this bandwagon from day one. Not all title companies are going to offer it. And that's the other thing I wanted to talk a little bit about is that, I've talked to a bunch of title companies about this coming down for about a year now, and their opinion is they sell title insurance. And, they're not, eager to change their business model. So one thing that was very important to Concourse, and we bring that to Dream Forward, is that we want to be nimble enough to bring any product that exists to any customer. So if this is important to our customers, this is important to us. We learned about it very early on. We started engaging to sell this product very early on. And we're happy that we're doing it at this time. And if we can do it before everybody else, that's fine by me.
It's innovate or die, right? You talked about the behavioral patterns in a mall. Yep. Okay. They get it. They get that they are on borrowed time. And I've used this example ad nauseum. Blockbuster didn't see Netflix coming. And by the way, when they did finally see Netflix, they were too arrogant and stupid to do something about it.
Well, I would say a genius, Mark, but it's a low barrier, but thank you. I appreciate that.
That cranium fits a large brain. So
you've humbled me.
Yeah. But it's innovate or die, and so, MySpace didn't see Facebook coming. And by the way, Facebook didn't see, Instagram coming. It just so happened that they had enough money at some point then to maybe finally buy them. But that's a good example too, is
100%. And I expect there to be some sort of underwriter that comes out with a product similar to this at some point, because at some point their clients are going to clamor for it. They might not be looking at it now, but once this gets big enough for people to take notice, you're going to see a lot of these products out there.
See, and this is where I come in, and the slant from a loser's lunch standpoint on selling, the selling angle of it. We talk about the markets. We talk about business. Thank you, John. We talk about Varsity, correct. We're trying. But to me, the vision that I see here is you put this product into a loan officer's hand. The loan officer now can go out to their realtors, their builders, and say that I am not only able to provide a mortgage, but I'm able to provide a title product that, when combined with the mortgage, is going to save your borrower, $2,000, $3,000, $4,000, whatever the number is between the mortgage offering and the title offering, $5,000. Now, if I'm an originator, it's exactly right, Frank. If I'm an originator, I then take it a step forward. I say, okay, I didn't even know what Friendster is, so fair enough. So if I'm an originator, I then say, okay, even though I'm not an advocate of paying points right this second because of where rates are, I then say, what does $5,000 in points get me in terms of a monthly payment, right? Now, not all borrowers have the money. They need this savings to close the loan. But I take it a step further and say, if I'm saving my borrower $5,000, whoop, 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 okay, that's $30 a month. I'm just making up numbers here, folks. What is $30 a month? Well, I knew I can afford the $30 here. Oh, wait a second. That $30 buys me a house that's $30,000, more expensive, for example. Or it enables me to put in that pool that I didn't think I could afford. Or I'm able, to go on that vacation that I didn't think I could go on. Now, here's where we can make dreams sort of come true, hence the name Dream Forward. But, we can make dreams come true, make home ownership more affordable. And you, as an originator, that's true, John. But I miss Rum Jumbie. But
we all miss Rum Jumbie.
Yeah. But then you, as an originator, differentiate yourself from other originators.
100%. And to that point, what a great opportunity for you to reach out to everyone you know and say, hey, did you know there's another product out there in the market? And what a great educational tool. Even if, again, to your point, if you don't get the loan, to educate your realtors, to now you have a different relationship with the people that you do business with. You're now giving them information they probably don't know, and essential information that could help their borrower, whether they use you or do not. And that's a great message. Hey, I'm just here to tell you what is going on in the market. Here's something I think you could use in the future. What a great call to make.
Yeah, Jenna, do you happen to have one of the creatives that you could flash on the screen, that informational piece? So what's going to be rolled out to the originators is, so there's sort of a website for Dream Forward that'll have an order, an order page. But
Correct.
Then there's also an informational page. What is an attorney opinion letter? What does it mean to you? And so on and so forth. And then there's like a little bit of a fee comparison there. So and then Scott will work with you, if you want to have, for example, as we used to call it, if a lunch and learn, right? Get Scott on a Zoom call, on a Teams call with your realtor shop, right? And by the way, I'm speaking to loan officers here. If you're a realtor, reach out to Scott, right?
100%.
Teach your entire office what this means, where it could work. This may get you a listing, for example. It might move the needle in the consummation of an offer. Okay, what does it mean? Like, understand all the up channel and down channel opportunities to have a differentiating product like this. You have people walking through your open house and saying, hey, what if I told you that this house is going to be $3,000 less expensive than the listing price? Well, what do you mean? Hey, if you want to use this product, reach out to these folks. We've partnered with them. Here's how you could save yourself a couple $1,000 and it not hurt anybody in this transaction.
And this feels just like Uber on day one. This feels like a whole new product in a whole new space. You're going to hear a lot of people tell you it's not going to work. You're going to hear a lot of people telling you this sounds crazy. And it sounds crazy until your competitors are doing it.
Yeah.
Right?
Here's how crazy it sounds. Fannie, Freddie, and the VA all endorse it.
Right. And are pushing for it. So forget about endorsing it, pushing for it.
Yeah. So here's the content, it just gives you some insight into stuff that you're going to be able to push out at the originator, broker, realtor level. There'll be more of this as well. This is just an idea. And again, I just can't stress enough. This is for everyone. Whether you do business with EPM or not, whether you send the loan to EPM or not, whether you're even approved as a broker with EPM or not. retail and wholesale. It's an offering for home buyers.
And because we are partnered with a large public company, they will white label that document for anybody who wants to use it. So let's say you have a realtor that wants to talk to their buyers about this, their sellers about this. You can white label it to them. You can white label it to yourself. You can white label it to anybody you want to make it look like it's coming from you and that you're the person presenting it. So we're super excited about the product.
It's awesome. All right, folks, I think that's that. We've got a busy week or so coming up. We're both traveling as well as some others to the Nexa event in Scottsdale at the end of the week. Then I have actually, you're going to Nashville too?
No, I'm not going to Nashville.
You're not going to Nashville. Then I'm going to Nashville MBA, so we probably won't have a loser's lunch next Monday, by the way. So it's good stuff. Really excited about what this can do for homeowners, and I think you've done a great job here.
Thank you. No, I appreciate you having me on. I mean, listen, this is great stuff. It's brand new, and the only way to tell people about it is to do shows like this, to get the message out as best we can.
All right, so it's scott@dreamforward.com. If you're not connected with me on Instagram, it's @Presidente_EPM. I know I haven't been doing the market minute every single day. It's been a little bit crazy. But I will get back into the daily flow. Hope you're enjoying some of the other content. We are back under 4 on the 10s. That looks like a really, really, really tight ceiling right now. I'm encouraged about that. We still have the turmoil in the UK. We had a lot. What the word on the street is that there was either China or a large Chinese buyer came into bonds last week, which got us that pop, even after a bad CPI for bonds. We are reluctant on both sides. We had a nice rally this morning. We've already given back about half those gains. Yet every time we get back over 4, we have a pop. The range is the range until it's not, is kind of what it seems to be. Is we have this juxtaposition of the reality of our economy versus the Fed's intentions. The reality of our economy versus the CPI and the jobs report. At the end of the day, folks, stuff like this is undeniable. What Scott said about people walking around without bags, what I said is even worse. Johnny told my wife that, like, the foot traffic, he's been in the Millennium Mall, I think, for 2.5, 3 years. Said he's never seen it this slow. Never. Go back 1.5, 2 years when I said, hey, we walked in there and there were 300-400 people outside of Gucci. And I just use that example because they're in the middle of the mall. And they're like that stepping stone, right? They're high end, but they're not Chanel, or, they're not Hermes, or, they're not, same way like Rolex is not Patek. Okay. And maybe even AP to some extent. I don't know. What do you think about that? Is AP a little bit ahead of Rolex?
A little ahead of Rolex.
Okay. It's sort of like BMW, Mercedes, and then, Porsche, Lambo, Ferrari, whatever. So when you go from having people out the door at Gucci to the mall being empty, Gap otherwise, I think it tells you what's really happening. And, I know in speaking with many of our realtor partners, and you see what's happening in home building, I had a neighbor who sold their house just at the right time. Okay. And he's building a new house. He is absolutely saying that the bids that are coming in from subs are dropping like a rock.
Sure.
Okay. We know what the price of lumber and copper have done. It's just a question of when is the data going to catch up? So I am still making this call, which is the Fed pauses in December, cuts in March, keep the faith. This is a product that might help you do a couple extra loans to bridge the gap. I love it. I'll give you the last word.
Yeah, I urge everyone to get in touch with me who wants, more information. Very happy to jump on any Zoom or any call with any partner that you have. That's something that we do quite a bit of. So anything you need from us, let us know.
Product differentiation. Ask any CEO of any historic company. Product differentiation is key. Arguably the ad that put Apple on the map, and they were a successful company before that, but it was an ad that told you nothing about the computer.
Right.
That 1984 ad didn't even show the or did it just show it right at the end?
At the end they had it. But the whole commercial had nothing to do with the computer.
It had to do with George Orwell and so and some Olympian or whatever she was, because it was the running person with the hammer was a woman, correct? Wasn't it?
Yes. Yep.
Just throwing it through some massive TV screen with some old guy on it. This product is the hammer that's going to go through the TV screen of the old guy. Yep.
Right. And to sort of bring it all back about automation, education is something that really isn't automated well, right? Better to call your clients and say, hey, listen, this is out there, than sending them a deck or shooting them to a video that they're never going to watch. This is really hands-on, face-to-face communication with everyone that you do business with, telling them about something new.
All right. Well, I'll see you out. So you getting to Scottsdale when?
Wednesday, a little earlier than you guys.
Gotcha. All right. So I'll see you out there. To everybody else, if you are a lifer, and I said this at the end of when Kev and I were up on stage in Vegas at the Fuse event, if you are a lifer, if you're in this business, if you have been in this business, 2020, yes, there it is. 2023 is setting up to be a monumental year. So let's fucking crush it.
Sounds great.
Until next week, choo-choo.